Monday the 8th of May. Hope you all had a fantastic weekend. Obviously big news story developing from late yesterday, that being that Macron, as expected by the financial markets, has won the French presidential election. And so that's really going to dominate the briefing this morning. How that unfolded in terms of market movement being the kind of key question. And one of the most surprising things here was that, or unsurprising, polls were wrong. Polls were wrong again, in that actually he performed even better than the polls were saying this time round. The margin of error for the EU referendum was about 6.2, 6.3 percentage points. Macron outperformed the polls by over 7 percentage points. So an even better showing than what polls were indicating, but certainly they got on the right side this time in calling the fact that he was going to win, which was very much expected by the market. So in terms of actual numbers, this is kind of rounded up, but 66 to 34%, so an emphatic victory, as was largely expected given the two-round system in France and the fact that a number of the bigger other centre or left-leaning parties had already vocalised their support towards Macron, and so the voters fell in line, which, as reflected by this picture, the majority of which then covered in red, respective of Macron's party. The one interesting graphic here, just quickly to show you before we look at the market moves, is this one, and this really shows you the where the support for Macron came from. Obviously a transition from first to second round of the full pretty much catchment of whoever voted for him first time round. For Le Pen likewise, but as you can see from Fillon, which is centre right leaning on the spectrum, about 50% voted for Macron, a much smaller proportion for Le Pen, and probably the second most after actually supporting the centre left candidate abstained and didn't vote at all. Mélenchon, we thought would cultivate maybe a little bit of support, the most furthest leaning leftist people, given the anti-European stance of Le Pen, might have been drawn to actually flip far left to far right, but there was a very small proportion of people that actually followed through with that view. I would say that would have been the most extreme example. And actually, most even of the most leftist leaning all followed Macron's path, and Benoît Hamon the same. The majority, pretty much 90% or so of his party, given the fact that he had already said to back Macron to his supporters, all fell into line. So fairly large proportion of abstentions. Le Pen, pretty much as expected, drawing very marginal support from some of the other parties, but the overall balance of power going to Macron. You can really see then the reason why the market saw such a dramatic move in the first round, and really it was the first round that was very important. This second round was never really going to be as a big an event as the first round. And that's one of the really important things to understand about when you're trading these types of events. There was a very high risk, because of the unknown at that point, that Macron may not have even qualified for the second round. You remember it was a 4-horse race. Other than the two main candidates, there was Fillon and Mélenchon. And there was a distinct possibility that it could have been, the worst case scenario, Mélenchon-Le Pen or Fillon-Le Pen and so on and so forth. But once Macron went through, the market was pretty much assured then, irrespective of people might have some faltering faith in polls. The fact of the matter is polls got it absolutely bang on in the first round, and they've been accurate again in terms of calling it, if not were a little bit tentative with their calls. It was actually even outperformed what the polls were saying. How did that look on the euro currency? Well, I'm looking at a slightly longer dated candlesticks here, 240 minute. And really looking at this was the reaction that you had on the first news on the first round. That big gap up in price activity in the euro-dollar pair. This was the relief rally, if you like. Where we are at the moment is we briefly breached 110 at the recommencement of trade overnight, but really, in actuality, euro-dollar has done very little, if anything at all. And most people would say that now that this event has passed, it's kind of buy the rumor, sell the fact type price action. And actually, given the fact that the Fed still remain relatively hawkish, the Fed still are conveying that they remain on track for their interest rate rises going forward, in the context of the fact that the ECB will likely be fairly reluctant to sound too hawkish at the risk of the euro appreciating further, which would be a negative for them. And so actually the bias from here might be for a bit of profit taking from around this 110 level, which certainly we've seen after it breached it overnight in Asia Pacific trade. We got as high at the recommencement of trade at 110.36 before now we trade down to S1. I'd say certainly that overnight high would be pretty strong resistance. My directional bias on the day from here would probably be downward in kind of this idea of a bit of profit taking on these moves. Again, it's the movement that's been seen ahead of this event which has been ultimately key to decipher why the market has seen such a muted impact here. Let me look at gold. Now, if you look at gold actually quickly here, this is gold and what it's done so far today. So where we closed up on the session on Friday to where we're trading at the moment is about $1 difference. So despite some volatility at the reopening of electronic trade, gold has done absolutely nothing, sitting right on pivot at the moment. But if you look slightly longer time frames, let me just highlight again where the initial first round results came out for the French election. You can see there, that was the trigger for the moment of when the trend formed as some of that European political risk was factored out of riskier assets, or flight to quality if you like. What had been helping elevate gold and slightly longer picture, remember when we had the Syrian airstrikes, you also had the tensions growing on the Korean peninsula, then you had the risk heading into the first round of the French elections. What if Macron doesn't go through and you end up having a more further reaching political agenda in France? However, that didn't materialize, the gap lower in gold, and really that was the trigger then for this gradual move down that we've seen, repricing from really towards nearly 1300 all the way back down to where we are at the moment of 1230. So the reason why again gold hasn't moved is because gold has already done its move. You know, it's repriced itself a decent kind of $50–60 since the first round of the French election. Quick look elsewhere. Let's have a look at European equities. Just looking at the DAX here. So this was Friday's session, shooting higher. I mean, I was actually off the desk on Friday, but presumably having looked back at the payroll figures, the equity market liking what it saw. Europe outperforming in that respect. And I'm guessing if I look longer dated, these are all-time highs in the DAX. But looking where we are at the moment, as soon as the market has kind of opened this morning in Eurex trade, we've just taken some profit on that move. To me, even without even seeing Friday's session, given the pace in which this market rose, likely exacerbated by breaching again of all-time highs, following in sympathy with the news out of the US payroll report, the kind of expected Macron victory, which has then materialized. This is now kind of just profit taking on the back of that, and very unsurprising, I think, to really see a bit of a move back down to the downside here. Hasn't really been a great deal of equity news either, so I'd say the market's still being driven predominantly by more broader macro themes at this present point in time. Elsewhere, quick look at cable. Cable's still managing to remain up there. I did see some data this morning out of the UK which showed that UK consumer spending growth had slowed in April and is forecast to remain weak in the coming months. I mean, it was a private report from Visa, but it was talking about weaker household demand is taking its toll on retailers. I think the market's kind of got that point now about household incomes being squeezed by the pressure of slowly rising inflation. At the moment, the market still seems to be challenging the top end of this kind of broader theme that we've had I've still got this old chart marked up with some various flashpoints of activity from a fundamental point of view, and really we've that 128.06, which was that really strong resistance level previously post the EU referendum, has really acted as now the bottom end of this newly formed range, if you like. The market price still really hasn't managed to really breach with some conviction this 130 handle at the moment. Obviously Brexit talk still to be monitored. I believe there's a G7 getting underway at the end of the week. I'm sure Brexit for one will be a topic. From a political point of view, one thing that's been fairly evident is European officials obviously are quite happy with the state of play that's happened with Macron. It gives them ultimately a bit more of a stronger hand, if you like. Theresa May probably would have slightly enjoyed the fact if Le Pen had a shock win, because that would put Europe on the back foot going into this negotiation period, but that hasn't materialised. Obviously, if you are looking longer term from a political point of view and you want Europe to reform, I think what would need to happen here is not for Europe to be complacent that this is the end of the populist movement. That being said, though, I did see quite an interesting point from Deutsche Bank, and just to put this in a bit of context about how the global landscape is starting to slightly change more recently, is that you remember the Dutch elections we had back on March 15th. Geert Wilders, obviously he performed worse than expected. He was their far-right candidate. This follows Le Pen as well at the weekend, not causing another upset event like Trump or Brexit. You had the Freedom Party in Austria back in December, presidential election, the Finnish municipal election, Bulgarian's parliamentary election. They've all gone against the popular sentiment. In addition as well, 2 out of the last 3 polls for Italy have shown that popularity for the five-star movement, which are EU skeptic party in Italy, have started to falter, and the ruling PD, which is the Democratic Party, have started to now take the lead over the five-star movement. Still relatively small margins, but what was by some polls as much as a 7 percentage point lead for the five-star movement has now completely gone. So to say that we might not still have political surprises in the future, I think that still can't be ruled out, but certainly the global picture politically has changed slightly. Another thing which occurred at the weekend, I'm not sure if you read the headlines, but obviously one of the other big factors here is Merkel and her future in the German federal elections will get in September, and there was a German state election at the weekend. This was for, excuse my pronunciation if I get it wrong, but Schleswig-Holstein. They had a regional election, and Merkel gained momentum as challengers slump. So Merkel's party picked up momentum in the German state election with a convincing defeating the Social Democrats who want to unseat the Chancellor in the national vote in September. So if you were looking for kind of a bellwether of sentiment going into that arguably a more important event for the future of Europe as a whole, the Merkel has actually seen a pretty strong bounce in some of the more lower level regional elections. I remember probably 2 months ago there was one of the industrial heartlands in Germany. She also outperformed as well her biggest rival, which would be Martin Schulz. So that might ease a little bit of a tension, or tension that may have been growing in Europe. Obviously the Le Pen not making it through also eases some tension on the Italian situation. Unlikely then that there'd be anything like snap elections in the immediate future. And so the market probably more factored at the moment about repositioning itself and a bit of profit taking rather than looking too far ahead on the agenda. A few other things though to look out for next from France, and this is really the next important thing, is that Macron has only just won the first battle. He certainly hasn't won the war as yet, because you still have the June elections, which is basically when they start looking at the parliamentary seats in the French National Assembly. Now, ultimately, this is really important. Macron has only just won the fact that he will now be president of France. What he now needs to do is ratify this in Parliament, and so that he captures in his party as much seats as possible, and so that he can govern potentially by a majority or otherwise in a coalition format. What you're looking at is the current composition of the 577 seats in the lower house in France. As you can see, the Socialists, which was under Hollande, had the biggest majority, if you like, but they were closely followed by Republicans, which would have been Francois Fillon. The National Front, of course, in the present setup, only have 2, likely to capture, though, a much larger proportion of seats, but certainly nothing like what the Macron party, which according to some polls could win 286 of 577 seats, so very similar size to what the Socialist Party currently have in Parliament. This will be important, though, because this was a diagram I saw this morning, because now that he's won the presidency, if he can win a majority in the National Assembly, then that essentially means then there can be implementation of Macron's campaign pledges. If no party wins, we then go to this cross-party coalition format, which then essentially he would need to partner up with either the Socialists and Republicans, so a kind of a trifecta of different parties, which I would only imagine would probably complicate the situation of getting the job done when it comes to decision making on various policies, or he can team up with the Republicans. So hence the reason why Fillon, when he was campaigning, was sort of saying it doesn't really matter about the others, because either way I'm going to be someone who's going to have influence in Parliament, because my party carries a large proportion of seats, and also I probably will be part of what potentially could be a cross-party coalition format with the ruling party Macron. If this does go through, obviously the more parties involved, the more difficulty it will be in Macron following through with his pledges. This is probably the remote scenario, Republicans win a majority in the National Assembly, cohabitation would take place, and that would mean that Macron's campaign pledges are even more difficult. I would say, though, the fact that Macron has outperformed and been even more popular than what people had imagined, that likelihood will act as the benchmark to be reflective of the fact then that he should do pretty well when these June elections for the French lower house come up between the 11th to the 18th of June. So that's kind of the latest state of play from an election point of view. I don't imagine there would be any type of French headlines you need to be aware of to look out for today that's going to really move the market. This is going to be more about how much does this market want to take profit on these euro longs. And now, if we're looking slightly longer dated on the euro, I would say, we've got downside levels. Well, where we are at the moment, if I just remove the rectangle here on my charts, we're already back down to the kind of previous highs that we saw on that initial rally relief on the back of the first round election result. They're testing it now at 109.78.5. A breach of there brings us back down to kind of the resistance level seen around the 2nd and 3rd of May. A break there down to 109, psychological and support before the rally that was seen on the 4th. And then any move beyond that point, we'll look at the gap open low that we had, which would be 108.48.5. But again, my kind of directional bias here would definitely be for downside, in the exception of anything else developing in the markets news-wise today. Okay, quick run through of some of the other headlines. There are some notable things to be aware of. For one, for any oil traders, Saudi Arabia says that oil cuts could extend beyond the end of 2017. So Saudi Arabia's oil minister said he's confident that an agreement by producers to curb crude output and shrink a market glut will be extended into the second half of the year, and most importantly, he says possibly beyond. So if you remember last week, it was all about talking about cuts could go on and be rolled over from the June expiration towards the end of the year, i.e. an additional 6-month period. However, Saudi Arabia, one of the most important components or producers, if you like, in this whole framework agreement, has said we now could go even beyond that. What has that meant for markets? Well, we've had a little bit of a squeeze higher. Obviously, we saw a bit of a rally on Friday off this quite big sell-off that we've had more recently. However, overnight we rallied again, got up to 47, but then we've seen a bit of a dip back to 46 as Europe really has come in, not really believing the bark, if you like, of Saudi Arabia. Have they got any bite is the question. The one worrying thing here, I guess, from an OPEC perspective, if we look at crude longer dated, is that it's been a very quick run to the downside that we had when we got down to lows here at the end of last week at 43.76. They've managed to talk the market back up to 46, but the market seems fairly resolute now that they want to put a bit of pressure on, particularly in its oversupplied nature of the market. US output continues to go up. OPEC might need to be more forceful with their commentary, as to Russia. And so this is certainly something I'd be looking out for from a news perspective as you go through the sessions this week. One quite interesting thing here, just looking on a daily continuation chart with crude, is that $47 handle, which acted as pretty decent support on that initial price movement that we had when people were fearful at the early part of March on the speed of US output going up before verbal intervention helped save the day back above 50 bucks. Now that we've broken that, 47 seems to be acting as a pretty good resistance level on the upside. So also be keeping an eye here or potential re-entering a short position. Should re-evaluating at that time, if it comes back up to that price point, what the conditions are. But the market, I'd say, still looks a little heavy at this point, with actual returns of OPEC being quite aggressive on the wording, having pretty limited returns at this point. One interesting thing though, which might be leading to this idea, well, sorry, this was the crude that I was just looking at here, was this. This was the 47. That was where we came back down in early March before we rallied, and then we broke that very aggressively, that big run lower, before then hitting that point exactly to 47 before paring back down again. Now, one thing that might be leading people to lose a bit of faith in OPEC in order to strike another deal, or one of significance at least, might be the fact that there were some comments over the weekend where Iran's defense minister has lashed back at Saudi Arabia, slamming the kingdom's deputy crown prince over comments last week underscoring the deep rivalries between the Sunni and Shiite power. So Prince Mohammed bin Salman has said that there is no space for dialogue with rival Iran. If you remember back in late November when OPEC originally struck this agreement, it was all down to the compromise being made really on behalf of Saudi Arabia that they would allow Iran to continue to recover post-sanction period while everyone else cuts, Iran can keep producing more oil. But it was this compromise that was really critical and key for them getting the first agreement done in many years. Now, this type of negative dialogue that's occurred over the weekend, this spat, if you like, between Saudi and Iran, does not bode well if OPEC are going to want to counter what has been a fairly aggressive move lower in oil prices of late. And this might be what's leading to a little bit of the market participants not believing full-heartedly what they're hearing, even though Saudi are now upping the ante in saying that they could go even beyond a 6-month extension with their oil production cuts. Okay, quick wrap up then with some other things as we come into 9 o'clock. So from an economic data point of view, you have had a couple of things this morning. German factory orders came out a touch above expectations, 1% against expected 0.8. But overall, even though this was the second straight month of gains in factory orders, which was promising as it was driven by an increase in foreign orders. The data being overshadowed, I'd say, by other factors at play, i.e. this market just trying to reprice itself now that the as expected event has happened and Macron has won. Overnight though, one thing to just possibly keep an eye on is that although everything we've talked about is kind of erring on the side of positivity from a European political risk perspective, China is showing some signs of potential concern. Overnight, China's export growth halved last month in dollar terms as imports slowed markedly more than expected, tracking with recent readings that suggested lower or slower expansion in the country's manufacturing sector, which is obviously key for the country's economic performance. You can see here from the charts the dramatic slowdown that we've had more recently. Maybe this is tied to somewhat the seasonal factor of Chinese New Year and so on, when demand tends to be elevated, but certainly a bit of a slowdown. And what we've had, quite interestingly, in Chinese stocks is the Shanghai Composite fell to its lowest level since October this morning, or overnight, extending a multi-week slide spurred by authorities' efforts to tame financial risks. So actually the authorities in China have been trying to tighten the liquidity, which has the same net effect, I guess, of tightening of policy or raising of interest rates in that respect. And as such then, what that's happened is that as you start to remove more accommodative conditions, equity markets tend to not like that type of policy activity. The tech-focused Shenzhen Composite was also printing a 4-month low. And if you remember, back in 2016, what was one of the driving factors which stopped the market, and certainly the Fed acting on their path that they so wished, was a big fallout in the Chinese markets on fears of a hard landing, which created exceptional volatility in the Chinese stock indices. And just pointing it out then overnight, Chinese stocks, quite under the radar, have just printed a fresh 7-month low overnight. So although this isn't having a direct implication for the markets this morning, if that trend continues, I'd only expect eyebrows to get ever more risen, if you like, and people will start looking at these types of things coming out of the Far East as another disruptive factor potentially for what has been more calming effects like Macron. Just as I've been speaking, I've just seen Russia commenting they support extending OPEC oil deal beyond 2017. So here come the Russian brigade, the plunge protection team as we call it. Let's see if it's moved the market. Yeah, there's been a little blip up. Russia's just made that comment, little 20-cent pop in prices. But again, it's kind of like shooting all your bullets and then there's nothing left in the chamber is the risk now. I think OPEC risks running. Do they now need to come in and just start bringing forward production cuts and actually saying we need to action it now? Would that be enough then to really make this market believe it and this price to get back above 50 again? We shall see. Okay, calendar wise for the session today and for the week. For today, it is fairly quiet. That's typically the case for those of you more experienced. Mondays do tend to be that way. So looking ahead, you got the ECB's economic bulletin. That's normally a non-event, as too is the Centex investor confidence reading. Very little coming out of the afternoon to really get your teeth into. Fed labour market conditions index, consumer inflation expectations, maybe worth just keeping half an eye on. Speaker wise though, although they're non-voters, you do have Fed's Bullard, tends to be a fairly opinionated fellow. So I'll be interested to see what he has to say, and he is speaking on interest rate policy, as well as Mester, who's a hawk, speaking on outlook for the US economy. For the week, in terms of how that is structured and where the balance of kind of volatility may come, today is more of a digestion day of the aforementioned events politically that have occurred. Tuesday, it is pretty quiet again. Not a great deal going on. Some German figures that may draw some interest, but and some Fed speakers. Wednesday, you get inflation data out of China overnight. You also get German unemployment change. You've also got ECB's Draghi speaking. Thursday is a very interesting day though for the UK. Construction output, manufacturing and and industrial production, as well as the Bank of England rate decision. I've not read any of the previews as yet, but I'd expecting no great shakes from the BOE this week. No need for them to really do anything at this juncture, certainly not with an unclear near-term horizon politically, and with inflation on the up, but in a fairly gradual fashion, and well within their targeted forecast at this point. And then Friday is actually probably the more interesting day from a US perspective, and that's particularly because you've got core inflation rate coming out of the US. That will be one of the key numbers from America this week. Retail sales, Michigan confidence, other things to look out for on that G7 meeting day one going through into the weekend, starts on Friday. Okay guys, that's your wrap. So, bit of buy the rumour, sell the fact to this morning's price action thus far. Macron win, but as expected. And so now we wait really for the US to come in, see how they digest that, and do we get a bit more of a further reversal of the market movement that's been seen over the last couple of days heading into that event. Okay, see you in the chat room. Have a good session. Any questions, please feel free to come to me directly. Thank you.